हेलो फ्रेंड्स, गुड मॉर्निंग टू वेल एंड वेलकम टू अनदर वीडियो विद एसडी। मैं हूं एसडी शानंद दास, मल्टी एसेट ट्रेडिंग एंड इन्वेस्टमेंट स्पेशलिस्ट। इन दिस वीडियो आई एम गोइंग टू टेक अ लुक एट द Nifty 500 and at a different sectors to understand what's going on with the market. And broadly, we have been on the right direction. If anyone has been looking at my videos or any kind of post steadily, due to time factor, I'm not always able to post on a regular basis, but all the social media. But I try to post at least one of the social media whenever it's possible. So here is what we are going to use for this one is basically the fountain of gold setup of mine. Indicators, I'll go to indicators में जाएंगे, SD Rainbow Wave version 1 click करेंगे, SD Rainbow Wave version 1 उसको अप्लाई करेंगे, कुछ सिलेक्शन, इफ यू डोंट नो हाउ टू सिलेक्ट विल जस्ट अप्लाई इज डिफॉल्ट। साथ में SD Rainbow Wave V2 लेंगे जो है बेसिकली रिस्क मास्टर। V2 ऑलरेडी मैं अप्लाई कर चुका हूं। साथ में आई विल टेक SDRSI X, so they will create the 12 factor fountain of gold setup. So in the fountain of gold setup, what we are taking a look right now is basically a correction. You can see a green socks appearing. This is a correction, an important, so one third exit, partial exit has appeared in Nifty. So from this short position, since this time of the sell, this is the first time one third exit is coming for the Nifty. So we can see bounce back, some bigger bounce back, but is the market ready for buying yet? No, not at all, as per the 125 minutes time frame. So in this discussion of Nifty, and we'll largely use the daily chart or the 125 minutes chart. So daily chart, it reached some important levels. The empty line, after reaching the empty line, it can definitely make a comeback. But the market is far from being ready to go for a buying. Now, if asset master, we can see also the risk level remains elevated in the daily. So that is another reason to approach cautiously to the market. Risk bounce back could be reasons to rather get out of the market rather than be more aggressive into it. Unless let the risk calm down, let things calm down, then only we'll be able to invest again. So it is now better to avoid the market with 125 minutes. Nifty is clearly in the down move. With the asset master, it's visible. So this is the situation with the Nifty. And now we'll take a look at the Nifty 500. That is a better representer. I think Nifty 500 is a better representer of overall stock market rather than the Nifty 50. You can see here also a green socks means exit chance is coming. One third exit chance is coming with this signal. The green socks, for green socks, we or red cap, we need not wait for the closing because risk management, protecting capital is our priority number one. So with this, we also saw the probability decline in the morning discussion when I was making the first video. I saw the probability drop, but overall Nifty 500 is bouncing back, but it is far from being ready to go for a swing buy and also not ready as per the daily chart. Daily chart bhi dekhenge, it's fully bearish, 5 out of the 5 factor on the momentum bearish. So broadly, it turns out to be on the bearish or a mixed side looking at the probabilities. Or none of the probability is stronger, so you'll get basically stuck in the system, stuck in the market here. So you had quite a good move, 120. Now would be to get a great time to exit. I'll prefer an exit of half the quantity and then wait for further correction or further chance to re-enter again. Currently, there is no chance to re-enter again. Now, once this is done, we'll take a look at quickly through the different sectoral indices. Now, while checking the sectors, once I have the Nifty 500 picture clear, I just want to see which are the basic sectors that are Okay, that are basically sectors that are basically showing which are the sectors outperforming the Nifty 500. Since Nifty 500 ka chart is already with us, we can see it's bearish. So we want to only look at the sectors which are outperforming the Nifty 500. So in this regard, first I'm going to take a look at which one is the better investment. Is it a gold Nifty bees or a gold bees? So in this regard, what I have to do, I'll have to hide the original lines. For the picture, it has been clear that gold bees has been so far on the daily chart has been much better. What about which one has been better? Is it the mid cap or the Nifty 500? Which one? It's no one. It's a mixed picture, background yellow, neutral, none was good. How about small cap? Are they been better? No. It's quite clear small cap has not been better. In fact, it has been much worse than Nifty 500. So small cap is not where the protection is coming. Is it the Nifty micro cap? No, it does not look like Nifty micro cap. Little mid cap has done relatively better looking at the small cap and the micro cap, but overall market is not, the broad market is not a healthy place right now to remain in the market. I have those who know along attached with me, we have exited long back when still some people were going up with equities. Have moved to more safer assets which are now firing superbly. Now, this is the equity rotation. Once is done, I'll take a quick check on the rotation on the auto sectors or other sectors where it's happening. It is auto sector is more of a neutral, means some good stocks you may find. Overall the sector broadly nothing doing outperforming. Same with consumption, their outperformance faded. It's now a mixed market, little bullish out, still on the outperforming side looking at the background, but more of a mixed market. Consumption would be struggling against or moving in line with the Nifty 500. The energy, the comeback has completely faded now. Now we can see further down move and failure from the energy segment. Next, we are looking at CNX Finance. Finance stocks. Finance are not good with the background turned red. Still red. Its finance stocks are definitely not the preferred choice right moment. So I can see overall FMCG, since it has been bearish, usually bearish time, FMCG does relative better performance where the background is green, but this is not a groundbreaking move. It's more looks like a range because of this scary move away. It's little bit of outperformance coming from the FMCG. Infra is bad with background turning red. It's not outperforming. The one that has showing some possibility once the market comes down is the IT. The IT segment is turning green. This is currently it is correcting, but looking at the background, it is clear that this sector is the one which could be showing some upward thoughts. But even for that, we'll have to wait for the market to come down. Once it comes down, these stocks which are ready to outperform or the sectors which are ready to outperform, they will start to do better. Media has been in a range forever almost right now for a very, very, very long time. Neither bull the bear. It's just moving in line with the broad market. Broad market has it's getting some performance up. Broad market falling, it is falling. Metal segment is getting hard. That is not a surprise. Metal prices are falling. China stocks are falling. So that's a big correction after a strong upward move in China and metal. So metal segment, individually commodities, I'm more in a toned down position, and I've seen gold, silver also starting to falter. So metal segment will now move away, will no longer consider it outperforming. Previously, जो लोग मेरे asset allocation video देखते हैं regularly, you know that this sectors flashed green in our radar. MNC is also correcting. Background is great yellow. So sorry, background is green, means short-term trend is bullish. So we'll still keep a check on the MNC. So we'll keep MNC rather on the radar right now instead of the metals. And outperformance I'm seeing in the pharma segment. Pharma segment is showing the push. You can find out some great pharma stocks. Look, that's where the outperformance thirst is happening. Then we are looking at public sector enterprise. It is still not, that means not bullish. The background is turned red. So we'll wait for the background to turn green to show us if it can has further. So bottom, not more confident bottom looking in terms of outperformance is what we are looking for. Not the exact bottoming, but more confirmed signal we will need. So this is the PSU bank, which just in the early phase of base formation. No PSU bank is yet satisfying my criteria, but it is in the early base formation. So in future, it can provide the necessary thirst on the upside and start outperforming. So PSU bank for now, I'll no longer keep it in the radar. The realty sector is not performing well. Then we have CNX service. Let's look at the service segment. If the service segment doing well, it's more on the range. It's more on the range. Short momentum is bearish, trend is bullish. It's a mixed performing segment. So I can so far see in the IT, MNC, and pharma, or pharma means as well as healthcare. So these should be rather in my radar rather than the other segments. Other segments are clearly down performing the Nifty 500. This India digital or IT segment, these are more showing a comeback. Whereas others, oil and gas, after showing initial promise, it has started faltering. So with the background red, we are no longer interested in the oil and gas. Is the sectors, the IT, MNC, pharma, healthcare, India digital. So broadly, IT, pharma, and MNC, these three are remains on the focus of outperformance. Other sectors are not looking so healthy. So I hope this discussion was helpful to you and will be helpful in navigate the market. But do consider किसी का सुन के भी trade नहीं करना चाहिए, including mine. These are my posts to help out the learners who have associated themselves with the Fountain of Gold setup. So thank you so much everyone for watching my video. All the best from my side, and as always, happy trading.